But here's Nate Griffin.
What's up, guys? How's everybody doing today? Well, as Mike said, my name's Nate Griffin. Today I'm going to be talking to you about financial awareness and job costing best practices. This is an area that I find contractors, construction professionals, roofers, a lot of you guys struggle with. You're great at, the process of producing the work and the production side, but we often fall really short on the financial management side. Let me tell you a little bit about myself. As Mike said, I hired him as a coach at the end of 2020, and I was running a multi-seven-figure custom home building company, and trying to dial in the reason I hired him was leadership and sales processes. So I had the financial management side, but I didn't know what business model I wanted to be in at the time. And so by working with him for a couple years, I, delegated out that business and now have it running itself. And I just kind of CEO manage the financial side of that so that I can be in places like this and talk to you guys about financial intelligence, financial awareness, and things like that. I grew up in construction. My dad's an electrical contractor, so I knew that field in and out. Went to college, got a degree. I have a master's in analytical chemistry, and then pivoted back to, construction, where the money was, the demand in the market was that we don't have a lot of people moving into that industry. So that's how I landed in construction. I've been in the GC business for about 10 years now. Started out handyman remodeling and moved to new construction. So we've kind of done a little bit of everything in construction, from the sales side, from selling roof siding and the whole 9 yards. 2 years ago, working with Mike and digging through my passion, discovered that I have a passion for helping people. I started my construction business with my brother. My youngest brother wanted to get into construction and do good work, but couldn't sell. So I was like, I'll come sell for you and build systems and processes. So we actually discovered that my passion lies with helping people build businesses, to help them grow, to help the entrepreneurs be successful in the space. When they're good at the production side, I'll bridge that gap on the business side. So today, where are we going to go together? I want you guys to leave today encouraged to prioritize your financial intelligence. I want you to go back, have job costing best practices, and be ready to start implementing things into your business so that you can be more profitable and at least be more measurable and know where your company's going. I'm going to talk about why that's important, the basic financial metrics that every company needs to be looking at on a regular basis. We're going to talk about financial pitfalls and places we lose. Then we'll get into job costing and then how all this ties up together to get you to financial freedom, which is something that we all say we're chasing. After that, I'll open up for Q&A, so if you have some questions, note them down and be ready to ask those at the end. So why does financial awareness matter? We're all very scared of this topic, scared to dive in and pull back the blankets and see kind of where we actually are. A lot of business owners are really just flying blind. You're producing, you're cash flowing, there's money in the bank, and we're really not worried about anything beyond that. Financial awareness bridges that gap from you being great at sales and great at production to having profits left at the end of the year. So if you're not measuring and you don't know what's going on in the financial area of your business, it's really hard to have those measured profits, and usually at the end of the year, you come up short and you don't know why. So what are some of the key metrics that roofing contractors should start with? And some of you guys probably look at these on a frequent basis. Does everybody track their revenue every week? Anybody looking at weekly revenue, gross margins? Revenue or gross sales, things like that, money collected, that's an important metric to know coming into the business. It's kind of your lifeblood and sales. People usually get this one right. People usually know what kind of money's coming into the business, what jobs we sold this week. That part we're really good at. The second one, which I think is the most important one to be measuring for roofers, is gross margin. How many of you know what realized gross margin you're getting on your roofs? No, very cool. That's more than typical. Most people are like, I'm shooting for 50%, but they don't know what it's coming out at. Gross margin is your contract price minus all the direct costs. So that's labor, subcontractors, materials that go into actually producing the product. That gets you to gross margin. And then everything after that is overhead that comes out to get you to your net profit number, your bottom line. So, 50% gross and then like a 15-20% net, that's a kind of ideal roofing business that a lot of you guys are probably in that, targeting 40% gross. Then we look at net cash flow. When you're selling these big roofing jobs, a big part of the game at volume is to be able to collect. So you need to know what our sales are here, production's here, but what kind of cash influx am I bringing into the business? Because the people you owe money do not take IOUs, and accounts receivable is a someone owes you that you need to be collecting on. So it's important that you're looking at that net cash flow coming into the business, every week. I do my financial reviews every Friday with my team. We look at all these numbers for all the different departments and job costing. The last one I put on here that's important, especially for roofers to be able to make decisions, is to have a budget variance report. And that could be for individual jobs. You could be looking at, I bid this job at 40% gross margin, but I came out at 30% gross margin, realized, and why. You can dig in with your team, pull that job, and start digging through each detail to determine, did we undersell the job or did it cost more than we predicted? Was it a production issue? So by knowing these numbers, it's going to let you as the leader meet with your production team, sales teams, and diagnose the problems to get everybody back on track to that real margin. And this needs to be done, immediately at the end of pretty much all the jobs, and at least the jobs that are going bad. We need to know where it's at. So where are we losing at? There's a lot of common financial pitfalls and mistakes that a lot of us unknowingly make. The first one on here is underestimating your job cost. When I started in building as a remodeler, you get out and everybody wants a fixed price contract in remodeling, and it's hard to know. And for years, I underestimated my cost. And so, I thought I was making 30%. I was making 15% because I did not understand what it actually costs to produce my projects. And with all the different products that you guys carry and things like that, it's important that you have a thorough understanding of your production costs, your material costs, and constantly updating, what those costs look like as you're looking to grow your business. Second one is not tracking expenses regularly. Often I find that for a lot of companies, you're like, I'll get to the financials later. The cash is paid, the final invoice is collected. We're not going to worry about that. Maybe we'll get to it next month, next quarter. Maybe we won't look at it at all this year. So being able to track expenses on a regular interval for all your jobs constantly, putting those receipts in where they go, cost allocation, all that becomes extremely important. The third one's overextending credit. If you're not managing those accounts payable and looking at your vendor, just charging and building up these big credit lines, sometimes that becomes a place where, we weren't managing that and what those accounts payable look like over the next year. And the last place I see a lot of us mess up at is that we're completely ignoring our net cash flow. And so we're not looking at, okay, we're paying this subcontractor this day and the impact that's going to have on cash flow versus cash flow in. And so part of the financial management is juggling when you're paying things and when you're receiving money so that you can kind of keep yourself in the green. So to be able to do that, we need clear job costing. So what is job costing? Job costing is where you take each individual job and project, and a lot of your softwares will do this, but you know what you sold it for, your contract price, and you deduct out all of those direct costs, materials, labor, and all of that, and you get your effective net margin after the job, so you can compare before and after. A lot of your softwares will do this, but a lot of it depends on you inputting all the receipts, all the numbers, all the information necessary to get that report. The benefits of job costing and why, as owners, we need to invest time and resources into accurate job costing is that we can build a more predictable company. If you have more predictable profitability, you now are scalable. You know that you need to go out and get so many leads to get so many deals, and so many deals generates this kind of profit. So if you have clear costing, you can look at your data for the last quarter, the last year, and you know kind of what margins you're going to be running at, and you can predict your profitability based on those sales, And then that becomes a system where you can make decisions about growth, make decisions about scaling, hiring, expanding your fleet. You get a lot of opportunity if you're clear about job costing. We can identify the most and least profitable jobs. If you're job costing all your jobs and finding out where your net profit is, your gross margin is on a variety of different projects, maybe you install shingles, metal, and slate, and then you realize, maybe metal roofing you only have 10% margin on. And maybe you decide as a company that we're going to pivot away from installing metal roofs. When you have this data, it's going to allow you to focus on the project classes, project types that best suit your team, best suit your installers, best suit your vendor relationships so that you can provide a great client experience. With that's those informed business decisions. Being able to make decisions based on actual data and numbers as part of the job costing process is going to make you a better leader. You're going to be able to remove some of those emotional decisions and be able to back it up with financial data because you have job costing data. You'll be able to say that we don't need to do this kind of job anymore, and here is the data to back it up. Or we need to raise our price on this category of business because the data says we're underperforming. This flexibility to adjust, kind of on the fly by analyzing those jobs on a weekly basis is going to feed you enough data to make those critical decisions and how you drive your business down the road. We're constantly making decisions, what jobs to take, what areas to focus our marketing efforts in, and by having all the numbers right in front of you and accurate job costing, it's going to be a lot easier to make all of those decisions. So what info do we need for job costing? It's really as simple as direct materials, what did we buy for the job, including all those quick runs to Lowe's and Home Depot to pick up what we forgot about. Our direct labor, what are we paying to get the product installed, whether that's in-house or subcontractors. And then, that gets you to gross profit, but we can also do an overhead allocation for our company based on job count and total overhead cost and things like that, so that we know, based on the sales price of a job, what net profit that we're walking away with. Let's talk about some of the best practices for job costing. As the market has rapidly changed, roofing vendors are contacting you all the time with another 10% price increase and things like that. It's important to constantly be updating your pricing database. So, I hope most of us are out there building a pricing database so that based on the product you're selling, here's my unit cost, my square cost, things like that. You also got to constantly be updating with your subcontractors what their rates look like. Do they have a rate change coming? So that you can be selling your jobs at the proper margin, you have to be constantly updating your direct costs in these projects. The second thing here for job costing is you need to train your staff on the job costing, fundamentals, principles, the SOPs that you're going to build in your company. You have a whole army of people out there and they're swiping the card at Lowe's. How are they handling those receipts? How are we allocating the charge at Home Depot? So it's important to get out there and build a process, an SOP, so that your team, your project managers, whoever's doing the purchasing, that they know how to handle those transactions and how to job code them or put the project ID on the transaction when they purchase that transaction at Lowe's or Home Depot. And if you've not been doing this for a long time, post-completion, job review. Pick a day with your project managers and team and sit down and pull the files. Go through them post-job and see, here's where we bid it at. Here's what went good. Did the production stay on schedule? And then dig deep into the financials. What did it actually cost us to produce that unit? What did we miss in the bidding process? And start adjusting those jobs for the proper gross margin and net profit that you're trying to hit for the company. If you're not doing job reviews, it's going to be hard to know what's going on at the granular level. So these are all things that are beyond what your accountant and your accounting software is going to be able to provide you. A lot of your CRMs are going to get you this data, but it's up to you to sit down and pull the files and review what went on with the individual projects. As you grow and scale, you can start just setting a threshold that if this project falls under this gross profit margin or delay, that it gets flagged. And then, your core leadership team's reviewing only the projects that are subpar or underperforming your business's targets. You need to implement a standard cost coding system. It's often with bookkeepers and stuff that things are just coded all over the place, and it's hard to get a clear financial picture in your books if you don't have a standardized cost coding system for your bookkeepers and with your accountant department so that they know how to classify transactions. Or at least a way to say, hey, this is miscellaneous we don't know, and we're going to have a Ask My Accountant category so that we can review that later and know how to cost code those transactions. And then I think all of you should be utilizing software to help you do job costing. A lot of the roofing software has it built in from when you sell projects, you bid projects. You can have all your costing data already populated in there, and then you can plug in all your actuals. So let's look at some of the softwares that I know a lot of you guys use. There's AccuLinks, Jobber, Service Titan. Is anybody in here using any of these softwares? Yeah, we got a couple. I'm on Builder Trend because I'm a home builder, and so I have Builder Trend as mine, but it has job costing built in. So definitely explore your project management software and see how it's capable of doing job costing, because then that's a quick reference tool for your project managers to take that project from start to end and have all the data put in there. It's important that when you're looking at these tools that they talk with your accounting software so that you can automate, transfer data, do less work. Anytime you can be efficient and create automation and links between your CRM, job management software, and QuickBooks for your bookkeeping team is going to make everyone's life a lot easier and less likely that you're going to miss some of those receipts and things like that. Let's jump into a case study and how analyzing your financials and understanding them can help. So I was working with it could be a roofing company, but this one was a plumbing company. They're at that $3 million in revenue, grinding along. It's a father-son duo. They're great plumbers. They're great at their trade. They understand the business, the sales, and they really get that part and the relationships and running the production team. Like, they're pretty badass at that part. But they're doing $3 million on an $80,000 net profit when they reached out to me to start helping them understand their financials. 2.67%, a little over 2.5%. It's not much money for how much effort they're putting out running all these teams. They had no job costing process. So, when I met with them, I sat down, I said, your most recently completed job, let's pull it up, let's go through all the data, let's see where your gross margin was. And he's like, well, I think it's 25%. I'm like, well, what was the effective? What was realized? And so as we opened up his accounting software, his project management software, there's no data in there, no data input, so he's flying blind. He has no clue what he made. There's no after-job review to go back and verify that the transactions are in for him. They had no process built out on the financial side. It was just sell, 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 collect money, cash flow, let's pay our bills and survive another week. They really were just struggling along and finally reached out for help, because when I started digging into that one job, we found out that their gross was like 8-9%. And so if you're running on 8 or 9% gross, you're going bankrupt fast. And that's the trajectory they were on, credit lines maxing out. So let's talk about what we implemented to help them. So the first thing is that we dig through their bidding system on that job and identified, some underbidding. They were vastly underselling their services because they didn't know what it cost to produce. They had no clue. They're just winging it based on, one of the big commercial databases that tell you what it should cost versus what it's actually costing their business to operate. So we implemented, expense tracking, job IDs, so that all transactions are being queued to a certain job. We started the after-job review process. So we, did a couple smaller jobs, and after each job started looking at the performance of those individual jobs so that we could make adjustments before we're catching it on the end-of-year accounting. When I started working with them, they were getting their financial statements about 3 months in arrears. So, this month they'll be getting August financials. And then they can sit down and say, well, we did pretty good in August or not, but, we're already making months of decisions because we have outdated financials that we're making decisions based on. We updated their whole bidding process. They use a spreadsheet system, and so we moved it into their CRM so that they had job costing and we could start accurately tracking and managing the markups that they're actually putting on their projects. The outcome of making these transitions and taking financial awareness serious is that all new jobs were being sold at a true 40% margin. They thought that's where they were, but they were drastically underperforming because of a lack of job costing and job cost understanding. Today, that company's profit is on track for 20% net this year after working with me. 20% net, even if they don't grow on that $3 million business, they can stay the same size, do the probably less work, and be way more profitable because now they understand what their job costs actually are. This was a crash course averted for this company. We came in right in the nick of time, and there's a family legacy at stake here, and now that's going to live on. The dad's getting close to retirement, and he's going to actually have something tangible to leave his kids in the business that they'll be able to run now that they know that they're on good financial track and not on the course for bankruptcy. All of this is to get you to a place of financial freedom. Financial awareness is a key part of that. So knowing what kind of profits we're making, what job costing looks like, makes our path towards financial freedom and what we want for ourselves and from our business possible. If you want to take home $500,000 a year, if you know what your profitability metrics are, you know what you can back into what kind of business you need to build to be able to hit those personal financial goals, the personal lifestyle you're trying to build. You can back into that because your business is more measurable. From job costing, good cash flow management is going to be key to getting to that financial freedom stage, allocating those dollars, putting them to work. And then with financial awareness, now you can project. You can create projections for where you're going next year and start plotting the course for your marketing team to fill your sales team with leads and your sales team, how many jobs they need to run. This will create the ability for you to back into all that based on your desired outcome next year. So this is your tool to create the goals and targets and implementation for all of the teams in your business to get your business to a place that it can support the freedom and the life that you're trying to get to, or whatever that is, whether you're building for an exit, you're building to give to family and inheritance, or just to cash flow the business to be able to invest in other activities. By measuring all this, you'll be able to get there. So from my talk, I want you to be able to go prioritize financial awareness. Make this something important for you and your family. You can do this with your business, and you can take and do the same thing with your family and start plotting that course in your home life on where you're trying to take your financials at. Adopt some of these job costing best practices. Go back and build SOPs and training to get your team tracking jobs, tracking expenses, and doing the tasks the way you want them to do. Make the process real clear and easy for your team to follow. By doing all this, my hope is that you go change your company's trajectory so that it can be more profitable, more successful for years and years to come. Here's some of my contact information, and I want to open the floor for financial Q&A and take some questions for the next 15, 20 minutes on where you're at and how I can help you in your journey. Any questions? So Clifton asked, should bookkeeping and accounting be in-house or outsourced? I think there's not a right answer there. I think both are possible. It depends on the size of your company. When you're looking at having an internal bookkeeper, you could have a hybrid system. You could have someone doing the day-to-day data entry and have an accounting or a bookkeeping service that's doing the back end and getting you those financial reports. I think the important part there is that you're getting accurate information in a timely manner. And so if that takes having someone in-house so that you can get those weekly reports and know where your P&Ls are, your balance sheet, your cash flow statements and things like that, that's key. Often I see when you start outsourcing that is it gets delayed. And so I encourage you on that side, if you're trying to outsource, interview the accountants or the team that you're going to be working with so that you're going to get the information and the KPIs that's important for you to know what to do with your business on a weekly basis, a bi-weekly basis. And if not, look at training someone internally to be able to do the bookkeeping and keep up with it. And then as you scale, maybe you go back to outsourcing. That's a great question. The financing cost. So this gentleman asked, do we make financing costs when we're selling jobs part of overhead? That's really a direct cost because if you're offering financing on that job, it's tied directly to that job. So for you to offer that for that job, that percentage is going to be part of your job cost allocation and not part of overhead. Madeline asked, how do we account for soft costs? Like, what's a specific soft cost? Like fuel or... Yeah, like the overhead cost of your fleet. That's a really good question. So for me and how I do my accounting for my soft costs, like my fleet management and things like that, it's all part of my overhead budget. So it's allocated in my overhead. I'm recovering that in my markup, in the markup of the job. You have a secondary question to prod that? For accounting? Yeah, I'm a builder trained. So Madeline asks, if someone's just getting started, how do I suggest they go about choosing the right CRM system? And honestly, I think, figure out some of the things that you need, like what you're looking for, and do the trials. A lot of these companies, they got free trials, walkthroughs, training. Invest some time and energy on the front end as the founder and leader of the company to find a system that's going to check a lot of the boxes you're looking for. Does it talk to my accounting software that I'm choosing to use? And does it, offer the things for me to be able to scale and grow? Can I add a bunch of users? What's that process look like? And what's the support on the back end? With Builder Trend, for me, their support staff for me specifically has been great. I have someone I can call, I have a contact there, they can, help me set up my bidding system right inside they can take my spreadsheet and then build it out for me. And so I'm looking for that kind of service from the company that I'm choosing to work with and then weigh in the different options for that. Okay, this gentleman asked, with job costing specifically, how frequently should you be reviewing your job costing? And then the second part was, how often should you be making changes and alterations to your business based on that information? I think job costing for my company is every Friday. We review all the jobs. We do, I build new homes though, so I have intermediary cost of where we're at in the project. Are we on track, not on track? But for roofing, a lot of your jobs, you got 1-2 day installs, you're slamming them out. But to review, on a weekly basis with your team, where did we project and maybe we exceeded it, maybe we won, and know where all those jobs were for the week. And then based on the bad ones, the ones that came in under target, why? That gives you the opportunity to dig in with, maybe those bad ones, you flag the sales guy, the project manager, and the three of y'all sit down and you go through that job and you pick apart, where did we fail? What was broken in our systems and processes, so that we now have the opportunity to improve that. Maybe it's something missed in sales and the markup was fine, or maybe the markup's wrong and we're not generating enough margin. We're not bidding them right, or maybe they uncovered something, didn't get a proper change order for, and they just went and bought plywood and slapped it up anyways, and all these things that lead to an underperforming job. But that gives you a time to get the key players, or maybe you have the production guy, project manager, sales guy, yourself, whoever was involved in it, so that you can dig deep into where did we go wrong. And then from that, that can lead to a immediate implementation of a change. If it's something like, man, here's what we're missing on the site inspection every time that we're not buying, we're not putting in our job costing, but then when we're there, we're having to send it out and additional material cost or things like that, or setting proper expectations with the client of what are those upcharges going to be? What are the things we're not going to eat? If we find plywood, how much is it a sheet of plywood? Things like that. But you can uncover that. Okay, 5 to 10 jobs a week. Yeah, so he asked, if we're doing 5 to 10 jobs a week, who are we meeting with to do these job reviews? Do you do sales meetings or production meetings? Yeah. I think as you're scaling and you're already an established business, you're doing 10 roofs a week and things like that, you set a threshold. Let's say you're shooting for 40% gross. You set a threshold that anything 39 and lower gets flagged, and whoever's doing the calculations is flagging those files so that you sit down with, sales team and production team, and that's the job cost meeting, and you just review bad jobs or jobs that underperformed. And in that way, you're not going to have time to hammer out every single job when you're doing 30, 40, 50 roofs a week. Like, you're just not going to be able to do that. So have a system where you have a threshold, flag the bad ones, review those with your team. Do I segment overhead based on like you can. So her question is, do we segment overhead as far as fixed costs, variable overhead, and things like that? A lot of your variable overhead, you definitely can segment off and attribute to jobs, things that are going to swing based on those jobs. But I usually, for my company, I take a high-level perspective of overhead just based on my year cost. So I'm looking at, what does it cost to run my company, and I know what range of number of jobs that overhead can contain. I don't do a full, then you can do your total overhead and just fixed and variable, divided into jobs for kind of that overhead per job allocation. And a good accountant firm, they have a lot of ways to look at hours involved in the variable overhead to help you get to like that net profit number per job. Not related to jobs, like just in accounting, in like a P&L sheet to segment? Okay. So variable overhead segmentation, like seasonality and things like that. So I think that comes back to, segmenting it and breaking it down in like your annual budget and knowing kind of, a lot of companies have that kind of marketing expense. It's down in the busy season and it's ramping up towards winter. And so to know that as part of your overhead costs, to average it out through the year so that in the summer months you're putting back more money to carry that marketing budget, those variable costs through the more expensive months. Any last questions? Clifton, how are we allocating it? So Clifton asked, if we have sales reps, if their base salary plus commission, where are we allocating their pay? Commission is a direct cost, and then their salary is really an overhead cost. And so if they're not selling, they're not getting that commission. So that one's easy to attribute as part of your markup. You're directly to that job as part of the direct cost, and then the markup catches their part of your overhead budget on their base salary. Let me scroll back through. Any last questions? Well, if you guys ever have any financial questions for me, feel free to reach out to me or the Win Rate team. We would love to talk to you and help you in any way that we can. And I want to thank you for coming to my presentation today. I hope you learned some information while you're here at RoofCon to take back and implement and make your business more successful. Thank you.